Good afternoon, everybody, and welcome to your daily market insight video here on Thursday, January 20th. This is Hunter Mozingo coming to you at about 4:30 p.m. Eastern time here in Jacksonville, Florida. And today we had another nasty day in the market, or more particularly, a nasty close. We're going to look at that chart or the charts of all the major indices, as well as some of the names that showed relative strength, albeit it was just a little bit of them. Just a handful. And then we're going to look at some of these bigger names that are starting to break down and some of the names that are just breaking wide open that we saw some really nasty moves in today. So we're going to get to all of that in just a moment. But first, what just happened? Bounce attempt fails. We actually saw the markets green early this morning, but it did not last very long. SPY and QQQ cut through key levels. So we're going to look at those key levels in just a moment. The G6 down 1.4% today. The S&P down 1.1%. Q's down 1%. Dow down 0.9 roughly. And the mid caps and small caps both still having a really tough time, down about 2%. So there is no change to market state at this juncture. Still in correction as of 1:18 last Tuesday's video. And there are no changes to the trend gauge. However, the long-term trend gauge, or where we added this little red arrow, this will most likely, barring a really strong move up tomorrow, will probably be moving towards neutral or bearish pretty soon. We did see as at the end of the day, the Qs, mid caps, a lot of these names getting definitive closes below the 200-day, even the Dow. However, today is the first close. So once we see some consecutive closes beneath the 200, you'll see this move to neutral or to bearish pretty quickly. But for the time being, the S&P is still above the 200 right now. So before we get to the charts, as I always do, let me highlight Revere very quickly. This is myself in the middle. If you have any questions, send me an email, hunter@revereasset.com. If you have questions about what we do at Revere, what our strategy is, you can send me an email, Dan, Tim, Merrill, Alex, or Don an email as well. So let's get into the charts, folks, and let's start here with the Dow. And really, this little 3-day pattern you see here is going to more or less be what you see on all of the major indices. So kind of failing near the tops from the highs from yesterday and near the 8-day exponential. So you can see here, DIA down about 1% roughly today, undercutting the 200-day for the first time since back here. Which that had not happened up until this point here, as you can see, for quite some time, going back a pretty good way. So DIA below the 200-day, as you can see, and I do want to show you a 5-minute just so you can see kind of how the markets were and how they finished. So DIA, along with the S&P and others, initial hour or two, we're trying to make some positive headway, and then just a really, really nasty close across the board here. So DIA held up better than the others for the most part. It is more defensive, but still not the action you want to see. SPY down 1.1% roughly. Not quite to the 200-day, but within about 1% or so. You can see the after hours trading, obviously not very good right now. But S&P only about 1%. 442 is going to be that 200-day moving average here. And you can see, just like I said with DIA, up near the highs from yesterday, and right at the 8-day pretty much rejected, and then a subsequent flush here on the S&P. The 450 level was kind of that really important level that was lost here on the S&P or sliced through. Additionally, you kind of had this 454 pivot, hoping maybe that could kind of act as a little bit of support along with these lows, but took out both of these lows today, took out this 450 level. Not really encouraging action here on the S&P. QQQ below the 200-day, just a pretty nasty, just tough action. Like I said, the Qs were up 1.5%. I mean, the Qs today were at 373.87 was the high today, finished at 361. So just another pretty volatile range. Same as what we saw with the S&P and the Dow. Got up near the highs from yesterday, rejected at the declining 8, closing below the 200-day. Now, something to keep in mind is we are a little bit extended to the downside, just from a standpoint of looking at the moving averages. Doesn't mean we can't stay that way. Just like something can stay extended to the upside, it can stay extended to the downside. And that's what we've seen. We haven't seen much reprieve in the sense of a legitimate bounce or any type of real buyers coming in recently. Just a poor close today on the Qs, along with the other indices. IWM really actually at a very interesting spot here. Hasn't been back to this 200 level since the beginning of 2021, really. And you can see closing more or less right on that spot. Took out all of these recent lows, 207, 208, 209-ish range, all of this stuff in here, undercut all of that, which we haven't, like I said, hadn't been back to the 200 level in quite some time. And you can see this whole base up here was made above 200. If we lose that level, that could be very concerning for small caps, which have just been having a really tough time, even ahead of the S&P, the NASDAQ, and a lot of the big tech stocks too. So last for the indices here, mid caps also kind of rejected at the 8 and the 200. Just so happened that they were kind of in confluence there. Now right at the lows of this base that you see pattern rec picking up. So losing this 480 level would not be ideal, but you do see there is some more support potentially to the left hand side of the screen, although we have not seen support act as support very much recently. And this is a recurring theme we see on individual stocks as well. As they begin to break down further, you begin to have to look farther to the left-hand side of the screen for potential support. And what that means is once you're through the moving averages, then you're looking for areas of previous resistance or previous support to hold up. So, and that's kind of the situation we're in. You see the mid caps here with below all the major moving averages and so on. So let's get to some positive names today. And albeit some of these charts aren't going to look great, but they were showing relative strength today. So I want to bring that to you guys. SoFi. Really wild range, wild volatility, wild volume the last 3 days or 2 days, excuse me. Recently, just I believe 2 days ago, early morning or in the afternoon, announced that they received approval for a charter to become a national bank. Obviously, that is big news to the market, and the market has reacted pretty positively to it. This chart is still a mess, but I do want to highlight this is big time volume, big time price action. Amidst the market being really poor. So SoFi, although the stock does not look great, a big change in character with some big news moving SoFi recently. Alcoa was and still is one of the better looking charts out there. Didn't finish spectacular as the market finished really poorly, but had earnings and had a positive response to it, ended up hanging in there and still being green. Really can't ask for much more than that on a day like today when you saw what you saw in the S&P and the NASDAQ and so on. XLU, the utilities ETF, the only sector ETF that was green today. All the other major sector ETFs red, so XLU actually green. We also had silver following up on its strength, green today as well, up about 1%. So not, like I said, not a ton to choose from out there. TAN was actually showing relative strength this morning, finished, I believe, slightly green here, but this is not a pretty chart. This is not a leader. And this is kind of what I'm showing you here is a lot of the stuff that we saw rally today is stuff that looks like junk, for lack of a better term, or stuff that is really under pressure being sold off. We saw some of that stuff have some life today. Like, for example, ARKK was slightly green today on a day where the markets were struggling. And then lastly, on the positive note, FFIV, which we talked about, had held up really well, rallied up into the moving averages and failed, but again, actually up about 2% on a day where the markets were really poor. So we want to highlight that. But as you can see, even these things that were up, these aren't impressive candles. These aren't really strong candles. We're not finishing at the top of the range. On the flip side of the equation, NVIDIA and AMD continue to get taken to the woodshed a little bit here. NVIDIA off over $100 here in the last 2 or 3 months, from 346 to 237, 238 after hours. As you can see there, there's a gap to fill right here. It's going to be, the high is 233, so something to keep in mind there on NVIDIA. It's also relatively close to the 200-day. AMD, same kind of story, down about 4 or 5% today, just not having a good go of it recently. Looks very similar to the markets, up into the moving averages, and some really harsh selling finishing at the bottom of the range. Amazon also not able to get any type of traction whatsoever. Really poor action here from Amazon, although almost back to this 3,000 level. This chart is so messy, it's kind of hard to read, just to be honest with you. I mean, this is a stock that has done nothing over the last year, and just breaking down after an attempted breakout here. This is a failed breakout that has turned into a breakdown here on Amazon. And the reason Amazon is down after hours, along with just the market being bad in general right now, Netflix reported earnings and absolutely got crushed. So I believe Netflix down 10, 12%, 20% now after hours. So Netflix down big. Peloton also announced today that they are halting production of their products and equipment. So Peloton, once that was announced, went down very quickly, down 25% today, from $171 to $24 over the last year is what Peloton has done. Qualcomm and Micron, the two semi stocks that were holding up and hanging in there, the ones that were supposed to be, a little bit more stable, less volatile than names like AMD and Nvidia, perhaps. Absolutely nasty sell-offs. 5% yesterday, 4% today. Now back to this pivot area. This is a really interesting spot here for Qualcomm, actually. And then Micron down another 4 or 5% today too. Back to 85 after getting close to 100 just a couple of days ago, as you can see here. So these two were holding up well. No longer are they holding up much at all. Applied Materials was showing big time relative strength just a couple of days ago. Subsequently, it was down 9%. So as you can see right here, it looked like Applied Materials was displaying big time relative strength. And had you bought this breakout, you would have just got slapped. Just a very dangerous environment to own individual stocks. And if you don't believe me, just look at the last week of trading in Applied Materials, which is a $125 billion company. XOP, the oil and gas exploration ETF, which has actually been a leading sector ETF. Oil and gas has done very well, particularly XOP, and down about 3.5% today too. So oil not immune to the selling today. And then we've also got metals and mining having a tough day from a sector standpoint as well, down about 3.5%, if I'm not mistaken. Yeah, 3.6. So that is going to wrap up today's video, everybody. I know it's a pretty quick one, but nasty day out there in the market. Just not a whole lot of constructive stuff out there at the moment. The things that we're holding up are beginning to either break down or waver. And those are things like Micron, Qualcomm, Ford, those FFIV. So we're seeing the leadership or things that are still look okay, for lack of a better term, begin to narrow and narrow and narrow to where that list of things that look okay gets smaller and smaller and smaller. So that is all I have today, everybody. I hope you enjoyed it. I will see you on the podcast this weekend as well as next Monday's video. Hope you all have a great weekend.